One of the most frequent comments we hear from new clients is that they wish they talked to us earlier in their career. And this is especially true for federal employees because your benefits are so complex. In this video, we're going to go over our 3 favorite benefits for early career federal employees and give you some tips to maximize those benefits for you and your family. Welcome. I'm Ed Smith, President of Valor Wealth Partners, where we're dedicated to educating federal employees on your complex and often underutilized benefits. In today's video, we're going to tackle the early career federal employee and show you some of the amazing benefits that you might or might not be taking advantage of. There's so many of them, we couldn't fit them all into one video. So we're breaking the 6 tips up into the fundamentals, which we'll be talking about today, and then some of the TSP tips in another video in our TSP tips series. And that video is called Early Feds Taking Charge of Their TSP. But both videos should give you a wealth of knowledge of things that you should be looking at in the early years in your federal employment. Now, you might have other things that you like. Please put them in the comment section so we can take advantage of them. Maybe we'll even create a video on it. If you disagree with us or agree with us, put those comments there too. We always like to hear what our viewers are thinking. Now, earlier when you started off as a federal employee, you probably were overwhelmed with everything that's going on. You saw this comprehensive benefits package and you had to put it aside because you had to learn your new job, how your agency worked, and how the federal government worked itself as an employee. So it's very understandable that you didn't take advantage of some of these benefits right away. And then you probably had some life things going on, and you always meant to get back to looking at those benefits and taking advantage of them. Maybe it was lack of time, maybe it was you heard untrue rumors or you got bad information and that's why you didn't take advantage of them. Today we're going to try to help you out and let you see what we feel is some of the best benefits for you to be able to start working with. In this video, our intent is to summarize some of the key points that you can benefit from as an early career federal employee. We're not going to go into too much detail, but we will provide some resources that you can research a little bit more. Now, they might be some videos, or they might be some links to other points in the description section, so you can take advantage of those if it's beneficial. We are fiduciaries 100% of the time, meaning that we're always acting in our client's best interest. Over today's video, we will talk about some different products and different services, maybe even a different company or two. But one of the things we want you to know is that we get no revenue from any of these. We do not get commissions from products like insurance or other areas, and this video is not sponsored by anybody. So when we do mention a company, it is purely for your benefit. Let's get right into the first tip that we want to talk about today, which is FEGLI and maximizing that for your benefit. The first thing you want to do before you're signing up for FEGLI or increasing or decreasing it is figuring out how much you actually need. When people look at life insurance, sometimes they look at their growing family or how much their mortgage is. In reality, the number one thing you should be looking at is income replacement. Life insurance will replace your income based off of different multipliers. You have to look at income not only today, but also into retirement. Now, you also have a benefit, the survivor benefit plan, but when we're looking at life insurance itself, that might be more beneficial than the survivor benefit plan in different various capacities. When you're looking at programs such as FEGLI, you have to be concerned about the cost increases because FEGLI on most of the variations of FEGLI increase every 5 years. The biggest increase is a 120% increase overnight when you hit 60 years old. This is a huge increase, and you have to be prepared for it. This doesn't mean that FEGLI is bad. FEGLI is actually very good, and it should be part of your overall life insurance component. But having a strategy of what insurances are best for you will really help you out. Now, when you're looking at insurance, there's a couple things you want to be able to look at. The first one is a factor using a cost per thousand. This way, you're breaking down your overall coverage into the cost either on a monthly or annual basis so you can compare one program versus another. Another thing you have to look at is how the insurance reacts over time. We just talked about premium increases for FEGLI. You also might look at other things like private life insurance that don't increase over time, or maybe they do. So this cost over time could be something that's very valuable when you're looking at the best program for you. And the last area when you're looking at insurance programs and seeing if FEGLI is best is, does it have specific benefits or riders that you can add? Maybe it has a premium benefit that if you get disabled, it covers that. Maybe it has a long-term care rider, or it builds up cash value. A lot of permanent private life insurance will be able to do this where FEGLI doesn't. But it's just comparing one to the other. If none of these benefits are good for you, there's no reason to go get this private life insurance that's more expensive when you could have gotten FEGLI at a cheaper price. The next thing we want to be able to look at is a huge benefit for early career federal employees. And it is a boost on your FEGLI if you're under 45. Now, if you're under 30 or 35 and under, you would actually double the amount of FEGLI coverage you have. And between age 35 and 45, it decreases every year the amount of coverage that you have. This is a huge thing that a lot of people forget that they have, and they don't take advantage of it when they're trying to build their overall life insurance programs. So please take advantage of this if this is beneficial for you. If you would like more information, here's the video that we have on FEGLI B. Now, it actually talks about all of the different insurance programs and how you can get a deeper analysis of what is best for you. So please take advantage of it if you're looking for life insurance benefits. The second tip is to consider an HSA or health savings account. Now, to get an HSA, you would have to have a high deductible health plan that's either an FEHB or if you're using a spouse's health insurance and their plan having a high deductible health plan. But let's stay on the FEHB because we really want to be talking about federal benefits here. When you're looking at an HSA, there's a lot of really good benefits to that. But before we get to the benefits, let's look at something that you really have to consider, because it always comes down to looking at what you need first. And what you need to look at is what your medical costs are. Before you start looking at the different plans that you might have available, you really have to have a good understanding of what your medical costs are on an year-by-year basis or what they might be in a worst-case scenario. But once you have that, you want to start comparing your FEHB plans. You have two tools available for you that I know of, the OPM calculator and the Consumer Checkbook FEHB comparison tool. I like the second one a little bit better. It's been very valuable when we're looking at clients' plans and what's the FEHB plan for them. When you're putting money into an HSA, you have a couple of different figures you have to look at. As an individual, you can put $3,600 in per year. As a family, $7,200 per year. And then once you hit age 55, you can put in an additional $1,000 per person. When you're looking at the tax benefits, and this is the really big reason why you would be looking at an HSA, is you have triple tax benefits. The first one is its pre-tax contributions, meaning you did not pay taxes to get it in, and it also reduces your income. The next, it's tax-free growth. And when I say tax-free growth, you can choose the investments that you choose to put it in. It does not have to stay in cash. And the final tax benefit is its tax-free distributions if they're used for qualified medical expenses. Now, on top of that, once you hit 65, you can take the money out tax-free for any general expense because you're in retirement, and you do not have to use it just for medical expenses. When you're looking at all of these HSA benefits, a lot of people might look at an FSA and say, well, hey, I have an FSA. Why would I want to take advantage of an HSA? In my opinion, an HSA is better in a couple of different reasons. One of them, it is not a use it or lose it plan, meaning that you do not have to use it in the course of a year. You can keep it forever if you want to. The next one is that an HSA is a portable program that is your account and you can move it to wherever you want. An FSA is an employer-sponsored plan and it has to stay with the employer account. It cannot be moved. The final benefit is that an FSA, as I just mentioned about the investments on the HSA, the FSA has to be staying in some type of cash or a low-yielding investment. And it's also a short-term investment, so that makes sense. An HSA can be used in a wide variety of different investment vehicles. You can be very risky, and there's other options that you can do if you get very creative with HSA accounts. We have a client, she's 41 years old, and she has over $36,000 in her HSA. Again, pre-tax contributions, tax-free growth, and if she needs the money, either now or in retirement after age 65, it's tax-free distributions. This is a huge benefit for her, and I love it when I see somebody taking advantage of a program this well. Hopefully this is something that's beneficial for you, but again, you still want to do more research to see if it's a good program. We have an article in the description sections from Kiplinger. Take advantage of it. They talk about 5 benefits. We've kind of summarized them here today, but they go into them a little bit more in depth. And please, there's always search engines that you could look at before you do anything. Make sure you know what you're talking about, or talk to somebody that can really help you out to make sure it's a good plan for you. Our third and final tip in this video is public student loan, or PSLF, is worth the time. Now, the PSLF program has got a lot of bad rap over the years, and part of it is really unjust. It's a relatively new program, so there's going to be some problems, there's going to be issues, and some people aren't going to qualify, but that doesn't mean it's a bad program. It's still new, and just now people are just qualifying because they've hit those 10 years of service. But take advantage of this program if you have student loans, you're looking at getting student loans, or you're looking at getting student loans for your children. The Public Student Loan Forgiveness Program forgives all of your student loans after 10 years of federal service or other qualifying employment jobs or working at different companies. It is a great program, and you don't even have to pay the taxes for the tax benefit of getting those loans forgiven like you do with other programs. Now, because that some people haven't qualified, they've really bashed the program. One of the main reasons why people have gotten declined is 85% of the applications had bad information on them. That's not the program's fault, that's the person filing the application. Also, because a lot of people didn't have the right types of loans, they didn't qualify earlier on. So it's very important to know what you're talking about here. We have a great video that goes really in depth, and I really want you to look at this if you're thinking about public student loan forgiveness. 2 things here. With public student loan forgiveness, you have to have federal direct loans. You cannot have private loans. And if you want to refinance, maybe do a private loan because you're going to get a better interest rate, you might be losing thousands, if not hundreds of thousands of dollars just because you're trying to get a better interest rate. So please, before you do anything, get some research here. Now, we have a company that we've worked with Student Loan Planners. They're a great company. They do a lot of research, have some free tools. We talk a lot about them in the video, so watch the video and see what it is. We'll also have a link in the description section so you can take a look at them and see a little bit more about them. Again, we are not sponsored by them. We get no revenue from them. We just feel that they do a really good job and specialize in this area so you can actually know what's best for you. As always, with our fundamental videos, we create an ebook for easier reading or sharing with other people. If you want it, there'll be a link in the description section so you can be able to do it. And if you're still watching, hopefully we've been providing some really good content to you, so please hit that like button so we know to be able to do more videos like this. In summary, there's 3 programs that we really want you to take advantage of, or at least look at. And that is FEGLI, or life insurance, public student loan forgiveness, and HSAs. We want the best for you and your family, so please get unbiased, conflict-free advice. Thank you for your time today, and we look forward to educating you in the next video.